Everybody, and welcome to this presentation on techniques to combat trade-based money laundering. Thanks for joining me and Alan. We're in New York City on this beautiful summer afternoon. I am the CEO of Complidata, a Europe-based 6-year-old financial technology reg tech company focused on automating and improving the detection of financial crime risk in payments and trade. I'm delighted to be joined by my good friend Alan Morley from Huron Consulting Group. We've been partners for a lengthy period of time, and our two organizations now have a strategic partnership, which is fantastic. Thank you, Alan, for joining me.
Thank you, Ben. That's a very kind introduction. So I'm Alan Morley, and I lead the anti-financial crime advisory practice here at Huron Consulting. Huron, for those of you who don't know, is a global consulting organization, and we are listed on the NASDAQ, and we have roughly around, just over $1 billion worth of revenue. We operate across multiple industries, but my division focuses on financial services, and my unit focuses on compliance and anti-financial crime. And we've been working with Ben and team at Complidata for the last, soon be 2.5 years, thereabouts. And we recently formalized our relationship in a strategic partnership. And so this conversation will cover some of our lessons learned, our observations, issues, and the current topics of the day, the challenges that our clients are facing and overcoming when they work in partnership with the two of us. Ben, back to you.
Fantastic. Thanks, Alan. One of the things I love about working with you is your background from an academic perspective and from a mathematics perspective, and the quality you can bring to the data conversation. I'd love to hear more about that as a result. We've both been practitioners. We've both been deep in this subject for many years. Why are we talking about TBML? Well, I think it's well known that money laundering is the act of concealing illicit funds from fraud, crime, terrorist financing, and other illicit activities. Money laundering in general is estimated by organizations like the UN to be potentially in excess of $2 trillion per year, much of which is via international trade, where moving funds cross-border is often harder to detect than local domestic payments. It's also only getting bigger in terms of the size of the problem, despite many years of efforts to detect and prevent money laundering. Trade-based money laundering itself is present both in the payments and the trade finance worlds. Payments significantly larger than trade finance, and obviously a high level of crossover where many payments are driven by a buyer paying a supplier cross-border for goods or supposed goods or services purchased. And I think that's partly because criminal organizations are increasing their level of sophistication. We're still seeing a very small proportion of containers actually checked at ports. There are still many statistics showing, exports from one country not equaling imports from another country, dramatically so. Still many new typologies, many new risks based on narcotics trafficking, on geographical pockets of risk concentration. So it's certainly something which, from a regulatory and from a financial institution perspective, feels very current. In addition, from a trade finance perspective, something we'll spend quite a bit of time on today, it's an extremely manual process. What we'd like to spend a lot of time on is the technological and operational opportunities using various different types of data to really make a difference, and not just to lift and shift manual processes and make them automated, really to do something very different, more powerful in detecting financial crime in trade-based money laundering and preventing it as well. That being said, Alan, do you want to take a typology by typology approach, and maybe we should talk about over and under invoicing, a significant risk in trade-based money laundering, and in
Absolutely.
payments, where often there isn't an invoice which goes along with a payment and a contract behind the invoice. So maybe that's one of the most challenging aspects of anti TBML. Over to you to share your thoughts on controlling under and over invoicing.
Thank you, Ben. That's a great idea. Okay, so under and over invoicing is what I call an easy way for bad actors to print money. And it really does take a very vigilant team of operatives to identify quickly that items that are being presented for payment, one way or the other, are either being overpriced or underpriced. And for systems to do this in an automatic fashion, a lot of data needs to be pulled together accurately and consistently so that the machines can run the calculations to determine something is amiss. Humans are much better at doing that, but the problem with humans, as we've discussed, that's manual. It's limited to a person doing one case at a time, doing the math manually, typically with a calculator or an Excel spreadsheet, and doing other investigations. So determining this kind of activity takes time, and time is money. So you have an opportunity that wasn't really in place 5, 6, 7 years ago when I was building specific scenarios looking for this kind of activity. And the technology in the day, back in the late 20 teens, etc., wasn't quite there to accurately and consistently pull this data in. I remember taking a PDF scanned document and operatives looking on the left screen and typing the information into the right screen. And then the screens would work calculations on a per case basis. And so you got a risk of fat fingering, making sure that you've got the right data moved from one environment to the other, because there was no way to properly and reliably screen scrape the PDF. That's changed. And this is something that I have enjoyed tremendously working with Complidata and your team, Ben, is we can now do this, and we can do it to what I would call devastating effect to bad actors wanting to do things or trying to get through the system with impunity, as they have done largely so in the past. So we've started to change the interaction and the capability at the point of entry with the documents. And that's become possible because of breakthroughs in cloud-based technologies, AI, and in particular the AI algorithms that you guys, Complidata, deploy, and how we organize the data to get it through the system effectively and efficiently so that you've got a timely tool that can lead to better interdiction and SAR filing. Ben.
Yeah, absolutely. Couldn't agree more. Thanks, Alan. I think that point around the data and information from documents empowering the ability to better detect illicit activity is absolutely critical.
Mm-hmm.
And I think a good example of that is possibly the most significant and controversial challenge in trying to stamp out over and under invoicing, which is assessing the relevant price or fair price of goods in a transaction. And indeed, whether there is a transaction, whether it's a ghost transaction or not, which is part and parcel of the challenge in trade-based money laundering, where a lot of coverage has been given to the fact that you can take, let's say, commodities in particular, where some well-publicized cases such as soybeans exports from certain countries in Latin America, or some looks like a light just went out here.
They know we're talking about them. They're trying to get at you. So, the challenge we've always had with pricing like that is getting accurate and meaningful pricing. So when you take a commodity, the commodity in the host country can be at price X, which is a given factor lower than the commodity sold in the secondary or tertiary country further down the line. And it's having the necessary tools and data pull together in a meaningful way. And with that, so Ben's getting the lights back. With that, you've got to be able to consistently do this. And as prices change in the open markets, the system you use needs to be able to follow and track the change in pricing and not get stuck on a table that was updated 6 months ago when soybeans were priced at 10 cents a kilo, and now they've gone up to 25 cents a kilo. The system needs to know that. So you need to bring in what I call a classic market manipulation mindset and capability into pricing in the market. And again, with external data sources being so prevalent and so much cheaper now, that information can be consistently brought into the equation and fed into the systems. And that is where we're seeing a significant uptick in terms of capability and performance. And the FIU investigator is able to pull information in. Their challenge is there's a lot of information now. How do they get to a decision? So when they've got the over invoice or the under invoice rate, how does the system present that and help them make a decision? And that's where decisioning algorithms come in and help prompt, or should we say, guide the investigator further forward with full transparency. So with tools like Complidata, you can see how that happens and comes together. The data comes in, the algorithms run, the scoring and the suggestion is there. The narrative output is there that says, okay, we've got the following data elements pulled together. We now know we have a score on the following price variance, which shouldn't be there. It's too high. So this requires further investigation. And in terms of further investigation, we've trolled the market for things like this in the destinations that are involved between region A and region B, and the price differential is wrong. This is a highly suspect contract, trade financing deal, and or subsequent payment when the documents come in readiness for payment issuance. So that's been a big step forward. But implementing it is another matter.
Yeah, agreed. I'm super interested in that ability to manage the amount of transactions that are being escalated for investigation. And I think the macro picture where you have, for example, trade corridors, and again, well-publicized cases where country A's export of a certain commodity may be massively smaller than country B's imports of that same commodity from that same country, indicating illicit funds coming out of country B into country A going undetected. Actually, I think some of the things that have changed now, number one, that ability to detect information on trade documents at a fine-grained level, goods descriptions are getting vaguer as criminals try and circumvent controls. But even vague goods descriptions can be extracted automatically to a high level of detail and leveraged, in terms of your point, Alan, from an open source information perspective with public information. And it's not just commodities, indices that are checked for a certain price. Actually, the amount of data using generative AI that can be orchestrated on a non-commodities transaction is really making a difference to actually identifying price differences in a non-commodities transaction. So I think that, together with the actual ability to say, okay, is this potentially over and under invoicing? There used to be, in the manual world, it was, is there a 25% difference between, something you found as a reported price versus what's in the actual shipment? Now I think there's a lot more relevant data, plus the filtering of that data, rather than just more information, the more transactions are escalated to the FIU for investigation. So it really plays to that ability to actually, at an in-flight transaction level, get to detection rather than just lots of escalation from a data perspective.
Yeah. So Ben, one of the interesting things that we talked about earlier as we were prepping for this and drawing from our collective experiences is how third-party data in the wire, in the MT700 messaging, in the actual 103s, 202s, starts to make more sense from a detection perspective. And what I particularly enjoy is how we're able to pull together that narrative that looks across. If you can bring the wire data in, and you can then identify the parties via the intermediary banks and other counterparties listed. If you do have the contract and you're the originating bank that has that detail, terrific. If not, you're relying on the wire, on the MT700 as well, to give you this greater data asset. And the language component in the goods description and the parties who the beneficiaries are has, again, allowed us to identify commonalities and other themes that we're just relying too much on a single human to know, oh, I know these combinations, but the next analyst didn't. And so we're overcoming what I call institutionalized personal silos of knowledge and experience, which are very valuable, but they're not necessarily extendable to each and next person along the way in the cycle. If you've got 20 investigators, they will investigate their own way. We're now being able to up the commonality of behaviors and the trends that we see in the data and share that with all 20 of them at the same time. And that's a significant step forward, as I keep saying. Ben.
Yeah, completely agree. I think from a payment perspective, you're absolutely right. Even open account payments are containing much more relevant information now than they used to. I think from a trade finance perspective, the payment is at the end of the transaction and can certainly be leveraged in terms of what hasn't been detected, at, let's say, letter of credit issuance or document presentation before the buyer is making the payment for the goods. Your point in terms of the broader kind of contract information, I think for me that plays to advances around know your customer's customer and know your customer's supplier, where we still tend to have a broad situation in the financial services market where clients using trade finance products are often asked on a periodic basis who their principal buyers are, suppliers are, geographies they do business in, etc. And that information tends to be point in time and static and not integrated with any level of even manual in-flight transaction review. Now we're starting to see the ability to actually do as you described and leverage that information in the transaction itself, even prepayment, from a trade finance perspective, for the detection of trade-based money laundering.
Yeah.
And I think for me that's super exciting because you can think about automation of AML red flags from the kind of manual past where there's some pretty good guidance out there if you look at the kind of high level FATF trade-based money laundering red flags or kind of more specific red flags that individual institutions look at will go to try and identify things like under and over invoicing. But actually now the ability to leverage not just that KYCC, KYCS type data, but also past customer activity, and to your earlier point, open source intelligence, you suddenly, in addition to all of the rich data on the documents or in the SWIFT payment message, you're suddenly bringing to bear a lot more information to those red flags. The trick then is how to filter that out at a transaction level so you're really, optimizing effectiveness and efficiency prior to any escalation to an investigator.
Yeah.
And I think that's where some of the experimentation and trial and error using, both NLP and similar existing AI techniques, plus generative AI to predict outcomes and LLMs to really compare language is super interesting and is not. We tend to find 3 out of 4 experiments are super interesting. One technology, 1 out of 4 it just isn't ready yet, and it's actually potentially detrimental. Like for example, generative AI doesn't necessarily distinguish between what's right or wrong. It just reacts to the prompt that it's been given and then compares to billions of data points. But I think it's really helping in a myriad of ways. We've covered under and over invoicing as a risk. We've talked about, to your point, data from a payment message and almost like a KYC type level. But I think also in terms of automation of red flags, identification of counterparties. I mean, that's been such a long-standing challenge in the payments world, but certainly the trade finance world, in terms of, is the entity your customer is dealing with a potential shell company, who are the ultimate beneficial owners. And I think that's something where we're seeing leaps and bounds as well in terms of improvement. Have you spent much time looking at that sort of space, Alan?
Well, when we look at what I call event productivity improvement, and I'm not a great fan of the term false positives, something's triggered for a reason. And with what we call classic binary rules, we have a limitation in what they can do. So false positives not necessarily fair or kind. What matters is something's triggered, why did it trigger, and how do we identify the triggers that are productive and that lead to meaningful investigation and ultimately to SAR. And so working with what I call the tool sets that Complidata has with FCR, and how it can bring AI and math to that equation and then feedback as a feedback loop to the rule system. That's where we've seen progress. We've used other tools as well, but I particularly like the malleability and adaptability of your platform. And that's given us tremendous insight from a combination of tuning and initial setting. We've done a number of recent new installs or new scenarios starting from scratch. And how do you determine the right settings? How do you determine your threshold points and values, etc.? So understanding the underlying data characteristics that trigger a SAR and working that back into the equation. That's where tools like Complidata are very helpful to us. And as you know, we've been doing a number of engagements along those lines. So for an organization that's brave enough to let us come in and work with the full set of data, covering the full AML lifecycle right through to SAR. So we need that SAR data, but it's done under lock and key, all the way back and work it in. You end up understanding what I call the true motivators of that SAR and investigation. So yeah, it's still nascent. A lot of people are very wary about bringing in that kind of technology. But I think the narrative capabilities that the natural language processing is able to gift the investigator. And when you go through that process of looking at the bands, as I look at it across the standard deviation bell curve, you can very easily explain a result and why something can be tuned in a given way and fed back into the open loop system, into the rules-based system. And at the same time, you are able to attest more clearly and transparently to the regulator, these results are valid because of factors A, B, C, and D. And that's been something that has been rewarding to see as well, because we have a much better dialogue now with people with the evidence, the traceability, and the lineage all the way through. So that's been helpful. But it's still early days. There's a lot to learn further down the line. And institutions are, what I can say, taking small steps in this. There's a lot further they could go, but I can understand their reluctance and hesitancy at this point in time because it's also new. Everyone has to learn a new language. Everybody needs to learn a new way of explaining themselves. Rules-based are dead easy because it's binary. It's either hit that threshold or it hasn't. It's here's how the scores accumulate to a given score and what have you. Now, that's easy stuff. Bringing in this new technology where you're allowing the machine to make an adjudication, a judgment call, is new. And operationalizing that is where I see the biggest challenge, because the technology works. It's how well the operation can adapt to embrace it and improve the outcome at that level. The initial event output is much better. And it's that feeding that process through. And that's part of the journey we're both on at the moment, Ben, with our clients, is doing that better. And so moving into another part of the equation is the infrastructural aspects, the architecture, the data, and the compute powers that are needed for this. And I call out that it really does make sense to be doing this in the cloud, as Complidata does, for very good reason. You have access to a broader, more capable computational set that can integrate with tool sets like AI, natural language processing, far more seamlessly than if you were to try and develop all of this in your own data warehouse, in your own data center, with your own CPUs and so on. I haven't found a large institution yet that's got all of the capabilities necessary to do that. Google has it, but typical bank, no, just don't have it. It's not what they do. It's not their job. And this is where there's tremendous leverage to be achieved through embracing the cloud infrastructure. The challenge is getting the data into that environment. So you have to construct the data. It needs to be presented securely and safely in a way in which the IT function, security function will approve, and then get it ingested into the system that's been correctly set up. So Complidata and ourselves, when we're doing this, we need to work very closely with the business to understand the requirements, both operationally and data, and then set that up with the thresholds, our scoring principles, and how the algorithms are supposed to operate and what the expected results should be within a given range. And that's what is now, shall we say, peak learning for most institutions in the AML arena, is how do we bring that forward? So all the way back to trade finance, there's a lot of new stuff that needs to be embraced step by step. And working with a technology that does the job in collating the data, bringing it together, analyzing it, processing it, producing a result, and then working that into the FIU is really important. A lot of new technology out there, but it's never been field tested. And that's where investigators just throw their hands up in the air and kind of go, I don't understand what I'm seeing. We've learned through our experiences how to make sure that the investigator fully gets what they see, because they've been an active part in setting it up with ourselves and Complidata. Very important. Ben.
Yeah, thanks. Lots to unpack there. Lots of very valuable insights. I particularly like what you mentioned around the focus on bringing down unnecessary escalations through the use of technology. And certainly, what we've found together is that if you do look at the results of past escalations and investigations, together with looking at payments information and techniques in trade finance, and to an extent vice versa, you can actually not only improve the efficiency or inefficiency of rules-based systems, often producing way too many false positives, which is a significant challenge in trade finance, because it tends to be any potential inability to explain something when doing a manual check gets escalated to compliance for review. Plus, even any sort of backward-looking systemic TBML checks tend to produce lots of false positives. But you also then bring down missed risk as well, because reviewing a suspicious activity report or a customer exit and taking action isn't just specific to a customer or even a customer grouping. It's much more broader than that, given suspicious entities identified. And doing that from a machine learning perspective, we found is super powerful and super interesting in the trade finance operation space, and really another example of where trade finance can learn quite a lot from payments, where we've been doing this year in, year out for many years, using AI alongside traditional rules-based systems. I think another interesting thing here for trade finance operations is the concept of transaction and client scoring. The ML output, with all the data we've talked about going into an in-flight transaction, will give you a score with a super detailed narrative as to why that transaction or the client of the bank, direct client of the bank, receives a certain score between 0 and 100 from a risk perspective.
Yep.
Very specific indicators as to why the machine, taking in, customer history, data from documents, open source intelligence, private data, why it's come up with that score. And it kind of, in my mind, it really transitions the trade finance industry to the future, which is automated analytical scoring. And it's not, let's draw a line, everything above this score gets escalated, everything below doesn't, because the level of information is the explainability is super accurate and detailed. I think that's also true on the commercial side, where we're seeing, the ability for, as you referenced a couple of times, things like trade speed from Complidata to be able to sound like a trade operations person, but without the potential for manual error. And we take the approach that it's a recommendation to empower human decision making rather than straight through processing. But that's also enabled reduction of inefficiency and improvement of effectiveness, where it's bringing down false positives by 30, 40, 50% in TBML from day one, as well as identifying risk that's been missed. So
I have to admit, I love it, Ben, when the results like that are actually formally presented. Here is when we do the proof of concept. I'm spending my time just watching everybody's faces, because there's an element of incredulity and how much, and then there's the test. They've got to go through and test that result, and I must admit it's very satisfying when everything comes back like, wow, that's right, we've done that. Oh, and that changes how people see their future. That's, I suppose, something that's very exciting, is we do all that work and we get them to move to a new paradigm. Gosh, I sound like a consultant. They're able to now think of that inefficiency, ineffectiveness is taken away. I can be more efficient and effective going forward. Wow, thank you. That you can see them get buzzed. It's good. So as I said, you can see them get buzzed. So I find there's a lot of new capability in the marketplace. There's a lot of noise in the marketplace about what can and can't be done. But I do know this, in the world of trade-based money laundering and seeking to bring in improved capability, an element of improved automation, data capture, especially from those documents that have always been a challenge for us. That's a huge game changer. And I know that from personal experience. And I suppose that's one of the reasons why I am so, I enjoy so much watching clients go, oh my goodness, it's captured the commodity, it's the item, it's done the math. 2 items in a container, unit price X, comes up with a value for over, under invoicing, etc. And they go, wow, and it does it consistently for a variety of documents. And you go, yeah, now we've moved forward. Now you've got the data. Now what? How you assess that data. So you've accelerated the onboarding of the information. You accelerate risk identification, and that's a good thing. So
yeah, totally agree.
Yeah, and seeing people realize there's suddenly more they can do, more they can achieve. They can get a better result.
Yeah, completely agree. And I think what's a shared philosophy that you and I have, and I think our organizations share, is this isn't about automating current manual processes. This really is how you can do things significantly differently. And I think to a comment you made earlier, cloud absolutely is the enabler for this. And I think many, maybe even most trade finance banks are progressing towards the cloud, already in the cloud, but there are still concerns around data sharing and security. I think one of the interesting things there is a way to go step by step. It doesn't have to be a big transformational change. I think in terms of specific AML red flags, there's a lot can be done just based on the documents, right? You don't, from day one, you can just look at a subset of overall red flags, which are document specific, and really using these proven techniques, find risk as well as reduce the need to escalate a lot of information. And partly that comes from some of the things we've mentioned today. Partly it comes from entity identification. Who is the counterparty or the assignee of the proceeds? Are they who they say they are? I think it also comes from maybe the next step in the evolution is looking at past client history, which again can be the sort of know your customer's customer, know your customer supplier, but also prior transactions. And I think that's where we're seeing complete turbocharge from the old. Is this unusual in as much as their standard business activity? Are they an electronics company doing a copper transaction? Are they focused on only selling into Europe and are suddenly selling to a new country in Asia? Those are very kind of binary rules-based, sort of unexpected activity type flags. Now, using AI, all of that is significantly different, both based on prior customer behavior, as well as maybe the third step, which is to bring in external data sources, open source, as well as private proprietary information. And I think building up a program along those sorts of steps in a very practical way, what can you do in terms of the information that you have? And then even, extracting data from documents in a more automated way, that gives you a sort of practical program to implement rather than a big bang, multi-year implementation with a lot of risk. And technology is evolving quickly in this space, which I think means it's all the more important to take that gradual step-by-step approach. But as you say, Alan, the results are in the implementations and proofs of concept that we've seen, and we're seeing the market move quickly in this direction as well. There's now much less tolerance for not taking action or for sticking with existing processes or for taking a manual approach. And I think even the challenges around data sharing are improving. AML Act of 2020 here in the US was in 2020, which promoted greater levels of information sharing and greater use of technology, very specifically in the act itself, in the legislation.
Yeah.
I think more and more technologies are empowering that. We haven't covered confidential cloud computing yet, but in theory, no data is shared whatsoever. It's all destroyed before it's compared. So I think that's another technology with a high potential around how to really take more action in identifying, criminal activity directly. Are you seeing any other sort of interesting trends from a new technology perspective, other than what we've covered so far today?
Well, I see responses to certain pieces of regulatory guidelines, new acts, etc. Take, for example, the UK 2019. Forgive me, the details just popped out of my head. I hate that when that happens. But it was something you wanted to make a point on. The key thing I find is good technology that's targeting the risk, but embraces the operational challenges that the client has to overcome to get that technology into the operation, and then ultimately creating the correct investigational setup leading to a SAR where applicable, is fundamentally important. So yeah, we've got to keep abreast of the legislative matters and the regional variations of that. There's always the data privacy thing, but as we know, it's not necessarily the name of the person we're no longer necessarily interested in. There are other pieces of data that can be far more telling. And that word tell is very important in our world. So I do see things, but it's very slow. But I do see a significant uptick in TBML, given the breakthroughs that we've had in the underlying technological capabilities and access to them.
Yeah, couldn't agree more. I also think it's exciting seeing collective industry action around trade-based money laundering, where some of the challenges that we've covered and you mentioned specifically just now are really being addressed collectively through trade finance associations like ITFA, like BAFT, through multilaterals and organizations focused on financial crime. specifically. And I think we're also seeing certain financial institutions really leading the way when it comes to, one challenge, for example, we've covered already, identifying counterparties. The ability to identify, is the customer's customer who they say they are, is the customer's supplier who they say they are, is significantly greater now. Now, legal entity identifier is an interesting positive initiative around, from a trade perspective, potentially large numbers of suppliers being validated on behalf of the buyers at the start of the transaction. But I think also looking at the reverse, which is indicators of risk rather than indicators of safety in a supplier base, which can be national or multinational, often regional.
Yeah.
And I think there, just the ability to look at complex organizational structures, legal entities, scraping social media, looking at, and again, coming up with a risk score as to, is the entity doing what they say they are, owned by who they say they are, and what is the kind of complex organizational structure, with multiple entities in multiple jurisdictions. I think that ability to identify a counterparty is changed really significantly.
Yeah.
I think is one of the most exciting developments in the trade-based money laundering space or anti-TBML space, which again has been partly, driven by some of the leading innovative financial institutions as well as the industry. But the technology is there to really make a difference here. And as you said, the kind of processes and the practical side of doing so is critical. What do you do with the information once you've identified, to, let's say, 92% likelihood that this is a shell company, for example, and, obviously reporting to law enforcement and, kind of broader action, I think is the next step. I know that's something you've had quite a bit of experience with, in terms of working with law enforcement post-investigation or during investigation of, unusual activity that's been confirmed as suspicious. And I think, we're probably both of us starting to see more innovation in the law enforcement and regulatory community around it, which I think is also pretty positive for the trade finance industry.
The other piece of information that I find is particularly valuable to a firm, and given newfound capabilities in the likes of Complidata, is the business can benefit in terms of early warning around changes in risk dynamics. And this is something we see being taken up more, that you can now see behavioral clusters in the data of, say, a given region or a given combination of factors that are risky. And as bad actors move from one environment where laws are becoming more restrictive, as a given government or etc. starts to enact new legislation that pushes out the bad actors, and they have to look for a new territory to go and perpetrate, should we say, this obfuscation of the process. You can track those details more effectively to alert the business. Nothing to do with an AML investigation, but you can say, guys, we're seeing an uptick in activity changing from region A to region B with these following ports or following licenses or government agencies being involved. So that feeds into so many other aspects of the FIU capability. And the more timely you make that, the more the business can prepare itself for a change in risk dynamic and say, right, okay, we actually can't operate now that this risk situation in the new region is growing, or we need to shore up our controls in that region. So the information becomes valuable to the enterprise to protect their customers, to protect themselves, and protect the system. So there's so much more now being used from the information that's being generated. So another feather in the cap for what we can do.
Yeah, very good point. And I think that really talks to a great extent to prevention. A lot of what we've covered at the moment is, in this session, has been around detecting unusual and potentially suspicious activity, both at the customer level and at the transaction level, and particularly in-flight transactions, and during escalation of unusual activity which hasn't been confirmed as suspicious yet. But I think what you just covered really talks to advances around prevention, which for me certainly flows from onboarding of a new client, all the way through the life cycle, where interestingly that information from the transaction is feeding back into the client level. And I think a lot of the challenges in TBML, some of the most significant challenges I've found throughout my career, is where you tend to have a company who's conducting some legitimate business, maybe it's manufacturing or industrial, and then the rest, fictitious money laundering on behalf of a drug cartel or a terrorist organization. So, and I think that's where, from a prevention perspective, there's a lot more information at onboarding available now, almost to the extent it's a detailed investigation, technology orchestrated prior to onboarding, and then even from an onboarding perspective, again back to the sort of counterparty analysis, really a much greater ability to detect that information, even if there's a legitimate front, than there used to be. So I think that's a big improvement from a detection perspective as well, which is
it's been great for my advisory business. So I'm being absolutely self-serving here. It's terrific. We can now engage the business, I think, far more meaningfully than in the past, and we bring a combination of capability, newfound capability, that leads to interesting information that can be used by the business. There is the whole FIU AML process. We've discussed that. But in terms of prevention and improved risk management for the enterprise, we just bring better information to the table. And that's a key win theme for us. And I'd like to see more of that.
Fantastic. Super impressive. Well, thank you, Alan. Really appreciate you joining me today. Really valuable insights, a vast level of experience in dealing with financial crime in general, trade-based money laundering specifically, and really very grateful you could share some of that experience and insights with us today. And very much looking forward to hearing more in due course.
Yeah, well, thank you, Ben. I look forward to other events on the road as we talk with more customers directly together and engage and deliver the value that we've been talking about. I have to admit, that look on their face is just worth it. And as you know, when I first came across TradeSpeed and the whole thing a couple of years ago in Belgium, how I looked at where I left things off when I was working out in Singapore in this regard, and looked at what had been done, and it was connecting two cables, electric cables, and getting the electricity to pass through. It was a breakthrough for me, and it certainly lit my fire, and we are doing things which make a difference, and for that I am grateful.
Well, thank you, very kind. And it's all about partnerships, right? It's all about teamwork and collaboration. We can't do it on your own, you can't do it on your own. So it's, for me, the value is how can we work together to really make a difference in this space? Because even though it's one or two steps removed, this is about preventing people's lives from being ruined by criminals. And that's what motivates you and I and colleagues in our two companies, as well as in the broader industry from a daily basis.
Yeah. Well, I'm very grateful for the training and everything that my team has received from Complidata, and the closeness with which your team works with my Huron team and brings things together. So with that, I will say thank you. And I think we can wrap this conversation up. So I'll say goodbye, and I look forward to chatting with you again in front of our clients. Thank you.
Fantastic. Thanks, Alan. All the best. Much appreciated.
Take care.